Hey everyone, it's Mike from Orderflows and welcome to today's video. Today is Sunday, January 8th, 2023. And, I was just going through some of my emails and, sort of a recurring question that I get probably asked weekly is what is the best chart type to trade order flow with? So, that's what's going to be the topic of this video. Now, again, before I dive into it, if you haven't already, be sure to subscribe to the channel. And if you find you get something out of this video, be sure to hit the like button. So what is the best chart type for trading order flow? I think if you were to ask 10 different people, you would get 10 different answers. But really what you want to get out of your chart type, because choosing your chart type is really a personal matter, and you want to get insight into the order flow from your chart that is making it easy for you to observe price movements. Now, what I'm going to talk about today, the chart types are the most common ones that I use for order flow analysis, and that's the time-based chart, a range-based chart, tick-based chart, and volume-based chart. I don't use a Renko-based chart for order flow. People ask what about things like Heikin-Ashi? Yeah, you could use Heikin-Ashi. You could use point and figure, although the NinjaTrader point and figure capability leaves a lot to be desired. And other things like line break you're not going to use order flow with. So let's just sort of take a look at the main charts. Now, the thing about order flow, right, is you're really looking at the information when it is most fresh, meaning you want to get your insight into what the big players are doing as soon as possible. So again, I'm not necessarily a big fan of looking at 30-minute charts in the order flow. You can. I know some people that do that. They want to get, they're looking for very specific things on a 30-minute chart. They're not looking at a lot of different things. They're looking for like very specific instances. But I'll save that for another video. But really, like for me, what I'm looking for is, getting me as close to what's happening in the market in terms of what's trading on the bid and the offer, right? I want to use this information as soon as it's available. Basically, I want to take advantage of things happening in the order flow as soon as it's printing, basically, if there's something to be had. So first we'll start off with an 8-range chart. And what people, sometimes people get all caught up in trying to search for the perfect chart type without even realizing they're sort of looking at the same chart. And people that traders that I've talked to that say, oh, I don't want to use a time-based chart because I don't want to be constricted by time, and all of a sudden then they're using a essentially like a 10-range chart in the E-minis, which basically acts as almost a 1-minute chart in most cases, or depending on what range you're using. They'll say, oh, because I like to use a 30-second chart on the S&Ps, and they go, oh, why do you trade such a short-term chart? Then they go with a 5-range chart, which is much faster than a 30-second chart. So first we'll start with this 8-range, and this is just a quick chart from, what was this, Friday afternoon, right around the 2:15 time period where we did make those new highs. And let's just sort of take a look. So you can see here at 2:17.17. Now again, this is an 8-range chart. I know some people that use 5-range. I know some people that use 10-range. I've always used an 8-range. I have tried looking at a 10-range, but 8-range is good enough for me. And we have that high showing up there. But what's interesting is you see this bar forms. Well, we'll start here, 14, 15, and 50 seconds. Then the next bar is 14, 17, 17 seconds. So about a minute and a half. Then the next bar, 14, 18, 17, so about a minute there. Then the next bar, about a minute later. Next bar, about a minute later. Next bar, about a minute later, right? So on an 8-range, you're roughly speaking, it's about a minute to a minute and a half per bar. And if you're looking at where's my minute-based chart, right? This is my minute-based chart. It's clear. It's a minute-based chart. It's every 1 minute. And so, like for example, at the high that was formed at 14.16 on the minute-based chart, on the range-based chart, you have a divergence. You don't have that appearing on the minute-based chart. Okay. So even though the order flow essentially, obviously the trades that are going through is the same, the way it's appearing on the chart, you're getting different sort of views as to what's happening in the market. Which one's better? Well, it really depends on what you want to look for in the order flow, because once the market starts moving quickly, on your range-based chart, you're going to get a lot of bars really quick that on the 1 minute chart, it's just going to be one bar. Now, if you go to something like a volume-based chart, this is a 5,000 volume-based chart. Now, on a 1 minute chart, I could see that, volumes are anywhere between, 2,500 to 4,000. Sometimes you get, even that, you get more, you get 6,000, and you can get a lot more sometimes. So, but basically between 2.5 to 5,000 on a minute-based chart. Okay, so if I'm looking at a volume-based chart, if I'm looking at a 5,000 volume chart, it's going to be about 1 minute, about 2 minutes, I'd say, more like 1.5 to 2 minutes per bar. So, there are these time. I mean, of course, there's going to be times where you just get a ton of volume that come through, and it's going to be, maybe 1 or 2 bars in a minute. But those are pretty rare. But generally, this one's moving more like a 2-minute bar chart, right? So you got to understand the market that you're trading. You think, well, I'm going to use a 5,000 volume chart, and it's going to do away with time because I'm just looking at volume. Well, market trades, right? It trades volume, and what you're looking at, I mean, if you follow the time-based chart, it generally trades about, on average, maybe 2.5 to 3,000 per minute. So that you could make the educated guess of saying, well, 5,000 volume chart is going to be about, 1.5 to 2 minutes. Okay, that's not complicated. Where you get to some slightly different charts is, a tick-based chart. Where's my tick-based chart here? All right, so this is a 1,000 tick chart. Okay, fine, fair enough. And, again, tick-based chart is based on each trade that goes through, whether it's one contract or whether it's 1,000 contracts, that is one tick. So with the S&Ps, the exchange, they put out the information every once in a while. I don't know how often, but I do come across it every so often. The average trade size in the S&Ps is like 1.6 contracts. Of course, it's an average size because there's a lot of people that trade one lots in there, right? Which sort of brings down the average, and you got the guys that trade 10, 50, 100 at a time. And obviously you got all those execution algos. It's all about, one lot here, one lot there. But just really briefly, if you're looking at, the 1,000 tick chart, again, it's about, here you just take the time, you just look at it, right? 14, 12, 57, 14, 13, 14 seconds. So this is about 15 seconds. And then to the next bar, it's about 30 seconds. Next bar again, it's about 40 seconds. This one, again, about 40 seconds. And then here is about 40 seconds. So it's around less than a minute, more than 30 seconds. So somewhere in there, you could sort of guesstimate on sort of the time. And again, I talk to people, well, I'm using a tick chart. I don't use time. Okay, well, what's your tick chart? Okay, well, you're using a very fast chart base. Now, it doesn't matter which one you're using. What matters is how easy is it for you to understand what you're seeing in the order flow. And again, one of the reasons why I do use time-based charts and tick-based charts and even range-based charts is sometimes I'm going to see something in the order flow that I probably might not see on a different chart. Okay, so and this is a perfect example, right? We came up to this high of the day here. And again, this is sort of like a setup that I like to look at, so we're going up into the high, delta's declining, then it turns sharply negative. As it turns sharply negative, I have, the point of control way up here on this red candle at the top. In the next bar, it's all selling basically. The delta is minus 416. The min delta is minus 417, so we're closing almost on our min delta. I got a nice stack selling imbalance coming in here. And, it just looks very bearish on a tick-based chart. Whereas on a range-based chart, okay, what do I have? Well, yeah, I've got here, it's sort of like delta is looking like it's increasing, 365, 377, 400. Then it's, sharply negative, minus 229, minus 551. I don't have the stacked imbalance. The stacked imbalance, interestingly enough, is split up between this bar and this bar, these two bars. The point of control is somewhere in the middle. I do have a delta divergence. Okay, that's nice. So what looks very bearish here on the 1,000 tick chart you've got bearish signal, but it's kind of a different bearish signal. Okay, I mean, the way the delta is shaping up going into the high is different, but after the high, you see the sharp selling taking place in terms of the deltas in here. Obviously, you don't have that stacked imbalance in this bar after the high is made. Now, on a time-based chart, you don't have the divergence. The delta is kind of mixed going up, right? It's 545, 249, 395. So it's big, medium, bigger again. Then again, it's negative, more negative. Okay, fine. I've got a nice stack selling imbalance here. I got a couple of zero prints in there. I don't have that divergence that's taking place on the range-based chart. It looks different. Now, that's not to say that you can't take a trade, but if you have sort of these three different charts opening or open up, again, you don't have to keep flipping your charts. Just buy another monitor and split it up. You could have, you just put 4 different footprints up here. You put, your range based, your time based, your volume based, and whatever you want, right? I mean, you could literally buy, you could buy like 27-inch monitors for around $120 now, I think. Let's go to Costco. They always got sales going on in these things, or Best Buy, just to have that up there, because maybe you might see something manifesting on a 1000 tick chart that you're not seeing on your range-based chart or your time-based chart. Because if you're just looking at a time-based chart, then you're probably going to miss this short opportunity, which was probably very obvious here on the tick chart, very obvious on the range-based chart. And again, if you're looking at a volume-based chart, there's nothing, right? There's nothing really telling you to get short up in here off this high. Right? So again, if you limit yourself to one chart type, then sometimes you're going to find yourself missing opportunities in the same market. I mean, and that's fine, right? I mean, opportunities come around all day long, right? It's not like someone's got a gun to your head and say you gotta pull the trigger, you gotta take a trade. But having just that extra chart up there, maybe you can see something in the chart. It's going to give you an insight into the market, specifically the order flow, that you might not have seen otherwise, right? I mean, sometimes things stand out more when you just look at it a bit different, right? That's why, if you ever, you go to, a museum and you look at the rocks or the gem collection, it's not, they put the most beautiful piece, it's a standalone in the middle. You could walk around it, right? You could see it from all angles. Sometimes the same thing with the market, right? Just looking at it from a different angle is going to help you see something that you might not have seen elsewise. And again, I don't recommend, like, during the trading session, just keep flipping around your charts. No, just keep them open. You could even have them, on different tabs. I like to use the tabs on here as well, but I also I have a lot of screens. Now, I'm not one of these guys where my whole wall is screens, but if you're trading just one market, it's going to behoove you. It's going to be in your best interest to have a tick-based chart, a volume-based chart, a time-based chart, and and a range-based chart. Just don't put yourself into the corner, because you might not see something that's so obvious there. And again, choosing the right chart type is a very personal decision, because it's going to be based on your risk tolerance, and your risk tolerance is one, but what I'm saying is like your heart attack tolerance, right? Because if you go too fast and you got to make decisions really quick, for some people, they can't handle that, right? Nobody wants to be trading under the gun, so to speak. So, what I would say is, if you're struggling to find your right chart type, put up different charts during the day, keep them side by side, and watch them. See which makes it easier for you to understand the order flow. Because, at the end of the day, it's pointless to have, watch the order flow if you can't make heads or tails of it. And oftentimes there is a chart type that is going to help you understand the order flow much better than others. For example, right, if you watch order flow on a volume-based chart, but you're not seeing anything, well, move away from that volume-based chart. Try a range-based chart. Try a time-based chart. Okay, it's all about finding the chart that helps you maximize what you're looking at in the order flow. So again, I hope this video didn't confuse you even more about chart types, but again, it's an important part of trading, having the right chart. Because at the end of the day, that's what's going to help you make the money. So you want to be looking at something that is easy for you to read, easy for you to understand, and can make decisions based off of. So anyway, guys, hope you got something useful out of this video, and I'll catch you guys on the next video. Bye-bye.